Chair. I'd like to move a motion today on this 106.4 that in light of the recent Equifax Canada report on increasing mortgage delinquencies and bankruptcies, the committee invite the Superintendent of Bankruptcies, Finance Canada officials, the Chief Economist of the Canadian Mortgage and Housing Corporation, Equifax Canada, and any other witnesses deemed relevant by the committee and the Deputy Prime Minister and Minister of Finance to appear separately for no fewer than 2 hours, that the testimony and documents tabled from these meetings be included as part of the committee's study on the impact of inflation and interest rates on mortgages in Canada.
Okay. Thank you, MP Halan. I understand it's been distributed, Clerk, yes, to all the members. So the members should have received it electronically. Everybody, I'll just give you a moment with that. And still, MP Halan, would you like to say anything else? I do see some hands up. Okay, go ahead.
Definitely. Thank you, Chair. Colleagues, anyone that talks to Canadians today hears the pain that Canadians are feeling. Canada feels more broken than ever before. The Canadian dream, whether you're an immigrant to this country or you've lived here your whole life, has turned into a nightmare. That Canadian dream includes things like owning a home or owning a business. But after 8 years of failed economic policies by this government and out-of-control deficit spending, it gave Canadians 40-year highs in inflation and the fastest interest rate hike seen in Canadian history, because this government put more debt on Canadians' heads than every single government before them combined. And that made interest rates go up at the fastest rates. And recently, Desjardins also said that Minister Freeland would miss her deficit targets. This means that the debt is only going to grow and the pain is only going to get worse. It was the Governor of the Bank of Canada in this committee that said that the interest rates would have to stay higher for longer. And this is the pain that we're seeing across the country. And on 2 separate occasions, the Governor of the Bank of Canada confirmed that this government's fiscal policy and his monetary policy, basically his try to tame inflation, are rowing in opposite directions. And it's because this government continues to spend money recklessly, and it's making interest rates stay higher for longer. We also know that Canada's GDP per capita is contracting. That means Canadians are getting poorer, and they're not getting ahead, even though they're working harder than ever before. Rising taxes, like the carbon tax scam, have contributed to unaffordability and rising prices. The cost of gas, groceries, and home heating have all gone up and continue to go up because of the carbon tax. And on April the 1st, this Liberal NDP government plans to hike that carbon tax 23%. We know that 70% of Canadians, they don't want this carbon tax. We also know that now 70% of premiers have asked this government not to hike the tax. One of those premiers is Liberal Premier out of Newfoundland and Labrador. Even he is calling on this Liberal government to not hike the tax. And the Governor of the Bank of Canada also said that getting rid of the carbon tax would put a huge dent in inflation. 0.6% of the inflation, the top line inflation number, can be taken off overnight by getting rid of this carbon tax that hasn't helped the government meet any of its emission reductions targets, but only made life more expensive for Canadians. And getting rid of that tax, bringing down inflation, could also help the Governor of the Bank of Canada lower the interest rates faster. This carbon tax has also contributed to the 2 million people going to a food bank we see in a single month in Canada. Something I don't think anyone could have imagined was a part of the Canadian dream, is seeing 2 million Canadians go into a food bank because they just cannot afford food any longer. And this government, with the support of the NDP, still wants to hike the tax on food. Second Harvest recently said they estimate, on top of the 2 million Canadians, that another million people will go into a food bank this year. The reality is that a third of those people are children that are going hungry. And because of the dramatic rise in the price of gas, groceries, and home heating because of the carbon tax, more people are at risk of a mortgage and credit card delinquencies. We know that after 8 years of this government, mortgages and rents have doubled. More and more of Canadians' paychecks are going towards shelter costs, sometimes up to 70% because of the rise in mortgage and rents. And we know that there's a housing shortage. This government is great at photo ops and announcements, but not at making sure that homes actually get built. The housing minister, Sean Fraser, also admitted that their programs don't actually lead to homes being built. And yet they keep shoveling out more money, which is adding to the debt that's keeping the interest rates higher for longer. And we also know now that Canadian business insolvencies are surging. Business owners and workers are at risk now of losing their paychecks. And that's what brings us here today, Chair. Equifax recently reported that mortgage and credit card delinquency rates are soaring, while bankruptcies are also on the rise. Mortgage delinquency rates are up more than 50% across Canada and up 135% in Ontario and 62% in BC. There's a significant jump in this number from pre-pandemic levels. The rise in mortgage and credit card delinquencies are significantly affecting younger Canadians. We know that 9 out of 10 young people in this country have given up on the dream of home ownership. It's impossible to see that, and those that are lucky enough to realize that dream today are living a nightmare because it's impossible for them to make these payments because of the high interest rates staying higher for longer. We also know that there's 70,000 plus mortgages that are being renewed every single month at a minimum of double the rate because of that high interest rate caused by this government's high inflation spending. Equifax found that credit card balances are growing primarily from reduced payment levels, especially from younger mortgage borrowers. Canadians now owe nearly $1.80 for every dollar that they earn. And this is why Canadians now are the most indebted households in the entire G7, and the debt level on households is bigger than Canada's entire economy. Household debt servicing ratios are at all-time highs.
It's crazy.
The cost of living crisis is driving Canadians to use credit cards or borrow money just to make ends meet. As reported by the Superintendent of Bankruptcies, the number of filings has risen 23%. In Ontario, they've spiked up to 76.5% and 46.5% in BC. And now Canadians are most at risk, according to the IMF, in the G7 for a mortgage default crisis. They cannot keep up with these payments and these renewals that are being renewed at more than double the rate in most cases. Conservatives believe it is time that the government take this serious issue and bring some common sense back. Canadians could lose their homes, their ability to borrow or qualify for credit, and the economy could suffer dire consequences. If there are significant bankruptcies or Canadians are unable to pay their mortgages, this country and the economy will be at risk. That is why common sense Conservatives are calling the Minister of Finance to appear to outline why the government has let it get this bad and what their plan is on fixing this. How and when will they fix the budget? And what is the plan back to balanced budgets so inflation and interest rates come down and Canadians don't have to worry about losing their homes? Thank you, Chair.